45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we'll talk about both the CPI and the PPI and the results, and we'll talk a bit about what I believe is going to continue to be the theme. Let's get into tonight's video. Welcome, everyone. We are coming into more of what we've been seeing. We got CPI came in hot. Everybody was starting to talk about the tariffs, and there was inflation coming. And then we get PPI today, basically unchanged. And then we're seeing no real results of anything that is suggesting that we're going to see inflation come back. Really, there's, I guess the only story I'm coming up with is that we are stuck in the summertime blues. I talked about this, here we are mid-July. We started this conversation in June. We're still seeing the choppiness. I talked about last night that we might see maybe a 62 handle, 62 and a half. We got 62.60 out of today's range, right back to the magnet, which is that 6,300 level. Right now, we're trading 62.91 on the S&P E-mini futures. So we're just seeing markets just completely just flatline. Great trading. I had a great day. I hope you guys did. Before I get too deep into tonight, I would tell you that there's not going to be, unfortunately, there will not be a show tomorrow. So bear with me 1 second, please. Sorry about that. Anyway, what do we do from here? We've got the Fed coming next week. This week, I'm going to almost call quits. I think volatility is going to stay range bound. I'll show you the fact sheet that I always run, and that will actually get you to illustrate exactly what I've been telling you, which is there's nothing going on here. But like I said, great range trading from the standpoint of what I'm seeing. There was a volatility pop today that I was scalping just in this range, and it was, I made most of my day right in this little range. I think it was about 30 minutes tops. So I was able to grab in. A lot of times, if you have the indicators and you have the hourly charts, some of these ranges that get set up with the market grid indicator gives you some really great parameters to scrape within, and that was the case today. I remember it was probably about 1 o'clock New York time, around there. I'm going to say 10 or 11 o'clock. Might have been a little bit earlier local time. So, excuse me 1 second. Sorry, had to sneeze. I apologize. But there's really, man, I don't think I've seen a more, how the best way to put it, just a more quiet market. Yesterday felt like we're getting a little vol coming in. That's great. I'll show you the database in a minute. We are getting continuing liquidation of positions on a short-term database. So we're definitely seeing some changes occur there, which are going to lead us to some of the things that I talked about yesterday. So today will probably be fairly quick. Like I said, if you're not getting the Substack, at least sign up for a trial. Unfortunately, I have some family obligations that I have to do tomorrow, and I'm not going to be able to be here live. So I will make sure there'll be a Substack tonight and tomorrow night. So that's going to be your best source if you want to hear what my macro outlook is. But they're really, I mean, I've never seen a market worse than this. I didn't review the treasuries. We'll go through a spectrum, and I'll be able to get through fairly quick and talk about things. But I don't have a riff. I don't have anything other than I would say that there's a whole group of people that are very disappointed that PPI didn't uptick, not because of their positions, because they wanted to troll Trump and tell him the tariffs are causing all these issues, and they're not. You know, if they aren't, they aren't. We'll have to see what goes on, and it looks like to me that they're just going to continue down this path. And I've talked about it, I've criticized bad messaging and all that stuff. So anyway, wonder where everybody is today. No one's. Usually we have a bigger crowd here. Thanks for coming, you folks. So let's go ahead and just get into the thing. I think we'll probably be out of here where we're at, 6 minutes in, just kind of talking about random things because there's nothing to focus on. So we can't focus on inflation. As I set up, if you go back a couple of videos ago, I discussed that I didn't think we'd see anything coming out of this inflation report. And that's certainly the case. So now we'll switch some rhetoric just for a minute before I move on. Just talk about the Fed. Trump keeps telling everybody he's not going to fire. He's not going to fire Powell, right? Headline on CNBC in the last hour: Will Trump fire Powell? He just said he wouldn't. So. What would happen if he? Who cares, right? Nothing's going to happen, and it's not. The guy's out of there next May. Whether or not he resigns and all the pressure that he's theoretically getting on him, I think a lot of this pressure is being manufactured by the media, as usual. They have to keep the dialogue going, and I did go on and on the other day about the true manipulation between the financial media and between all of the forecasters, the analysts. I mean, we're living in the matrix, right? So they're controlling everybody, trying to keep the narrative. Right now, there is no narrative. There's nothing of interest anyway. So let's go ahead now, set up the rest of the show tonight. What we'll do is we'll go through the typical database, and I'm just going to buzz through the markets. And if anyone shows up, or maybe a couple of you at the end, if I get through things within 30 minutes, we'll open to kind of a Q&A. And I still don't have an answer. I'm worried about there's one guy that keeps asking me a question about the whole blockchain situation, and I haven't had a chance to research it. So anyway, so let's go ahead and get into the crux of some of the things I want to talk about. So let's start with the database here. And we were at 68 and change yesterday. We're now 66. We're seeing around 650. I'm rounding numbers here. 650 exits and about a little bit over 200, and it looks like 205 or so new buys coming in. So we're seeing a gradual downtrend. We should move down to 62.58 in last night's Substack, and the database overview is talking about the real number to watch is 52.58, but typically 62, we get to 58, and then we'll see if we can hold around or if we continue to get some liquidation. I would like personally to see more liquidation. I'd like to see the database maybe stay above around 52, not get into the 48 handle or so, but that would be, I think, very healthy from a trending standpoint. It will be interesting. I'll just talk since I'm not going to be around tomorrow, but I will cover this on the Substack. what I'll do is I'll talk about the just a little bit about the intermediate database. This has been such a neutral week. I'm not sure unless there's a big pop on, on tomorrow or Friday, unless there's a big pop in the markets and something changes or sell off. I think we'll see pretty much a status quo intermediate trend. I thought last week, after all the new highs and everything, that we would see an acceleration and more buying on the intermediate. We didn't get it. Maybe it lags. Maybe we get it this week. We'll see what happens. And I'll cover that both on Monday Substack, Sunday night's video on YouTube. I should be around on that. So I apologize for not being able to be here tomorrow night, but family rules right now. So let's, like I said, other than that information, there really isn't anything else to talk about here. Like I said, we'll come in on Sunday night, and I'll try to address if there's anything that comes up when I'm doing my research later tonight. Some of you may have noticed that the Substack letter was out much earlier. That'll probably be the case for the next couple nights as well. And so I think it got out at 3 a.m. New York time. So about 2 hours, almost 3 hours before it normally comes out. So that'll probably be the case again tonight. So, but nothing here, so to speak, on the database. The summertime blues. This is just that choppiness we've been talking about, and 62.50, 63.50. And I'll go through the technicals here real quick. So let's just move on and see if we can get into the technicals on the S&P. So same pattern. We're seeing a bit of a consolidation. I want to pop up the fact sheet real quick, because there's this pretty much summarizes it. I'm still fascinated. I know I trained the AI to think like this, and it's so good. It really is virtual Bob. And one of the things that you'll see on the screen, you'll see flashing lights. So when you get the artifact, the actual live artifact, it shows you where the targets are. So it's looking for a move to 63.14. That's about a 20 plus handle move. Yeah, a little bit over 20. And so that's where right now the target is R1, S2, S1 is 83. And I think we've already satisfied that. Let me go up at the top here and take a look. Yeah, so far we're looking at 91, 6,300 is that number. But this really describes exactly the virtual Bob is right on the money. A lot of times I'll go through and do all the analysis on the charts, and then we look at this, and it's just telling us what I just said. So I'm going to start here tonight. And so we're looking at a pretty narrow range so far, but this snapshot was taken a little bit ago. We're trading 95. We just got a little pop in here, and so we're 2 handles higher. So nothing, no big deals there. But this pattern, so we got some Fibonacci projections over here, where this is really the R1's M2 status, maintenance mode. So it's let's just go up to that and talk about that. So PPM1 is neutral. It in the commentary, it's talking about how it's barely above the zero line. PPM2 is in maintenance, which is anything greater than 0.15. So those of you using the indicators, this is a place this sheet will help you to understand at least the maintenance levels. You'll see the legend down below here, which is telling you what the directional move or the trend mode that it's in. So what you'll see is the first, second derivatives and what their values are, and the commentary that you're seeing come out of there is basically telling you that it's writing up how you should think. So you can learn a lot about using indicators and understanding this. And like I said, I keep threading you. I keep getting diversions. I'm hoping that there's a pretty good chance that by Monday I might have the release of the artifacts or the ability for you to run these sheets on any market. I keep telling you it's getting there. It is. This has been my distraction right now. I just got a lot of family issues going on right now that supersede anything at the moment. But the bottom line is we're looking at this. I thought this comment down here was interesting. Futures 62.93 in an extreme consolidation range, but it's over here. You'll see this flashing light above my head. Let me move that over. This is the market status, a squeeze breakout pending. I think this is sort of interesting because what we're seeing in the patterns is that we're seeing that compression, and so we have right now we have only PPM1 in maintenance mode. Everything's fading, and I think the breakout's going to be to the bottom. And I'm going to look at some of the logic that I put in here to give us just a bit more information about the directional move that's the breakout. It's nice to know a breakout, but you know, my shiny coin needs to be shinier, and it needs to give me some probabilities. I've been working, last night I was working on some ideas on how to get some of those probabilities built in the sheet. So just know when these sheets, when they come out, are not going to be static. I'm going to have version control, so there'll be different versions that come out that you'll be able to download and use with Claude to be able to run this stuff. And you might like version 1.4, making these numbers up, more than 2.0. So you'll always have access to those previous versions if you like what's going on there. And at some stage, I will give you even some more insight on how these artifacts can be used. And you know, we live in a different world now, folks. Just know that. And we can expand our knowledge. I saw something kind of interesting, and being an older guy, I remember when electronic calculators came out, right? I'm old enough to know that moment. And you know, it was going to take away all math. I saw somebody talking about in AI that it's going to take all creativity away. People aren't going to even think anymore. And a big portion of what I do with AI is it is my creativity that I help craft, and I'm constantly telling the AI how to manipulate under my rules, not its rules. And if it does things outside of that, then I yell at it. And I'm going to do some videos, especially once these artifacts are out there, that are going to go in. And I've been kicking around just through some emails and some things on Discord and things that I've looked at, is I'm thinking about doing maybe even some live trading sessions as we look forward, where we're midday trading, and then at least it'll be recorded and you go and watch that. So I'm considering, I used to have a live trading room several years ago, and it's just a lot of work to maintain and to be there all the time. And I can't make those type of commitments, but I do want you folks to see some of the stuff. I thought about I need to get it set up. Right now my trading is done on a PC, not on the Mac that I'm on right now. But anyway, just know that these are things that you can learn from using these sheets. So I want to get on so I don't end up rattling on for an hour or so. We're about 20 minutes in. But so you get the case. I could run this for the NASDAQ. It's going to have similar type of values. But I think this extreme consolidation, pre-breakout coiling, so you got the market coiling in. I think it's the downside, and this sheet is focused on right this moment, basically today's session. It's not looking forward. It would be interesting to maybe I'll do a sheet one day where I run the daily, and maybe the beginning of next week, if I think about it, you guys can yell at me and tell me, because we could theoretically do this live, but we do a daily, then we run a weekly, and then maybe even a monthly, just to see how we stand within the range and what type of larger trends are being picked up. And in the end, when you're trading, the main thing you want to do in trading, even if you're swing trader or whatever, is you just want to get the direction right. If you can get the general direction right, you can get bailed out sometimes of some bad entry points. But if you have the right direction, then it's possible to set through things. I don't use stops at all, ever. Okay, so but I use position sizing control rather than stops. So that someday excuse me, losing my voice here. Someday I'll talk about that. But you need to have a reasonable amount of capital, but you can do it even with the micro minis if you're trading. And I trade, when I'm day trading, only ESs, nothing else. So I don't trade NASDAQ because it's way too volatile. It's not, I don't trade it well, so I don't go there. There's quite a few markets. One of the things theory I've been talking about a lot, just to bring it up, is you need to develop your own trading pit. When I used to be in the trading floor, you couldn't be in two trading pits at the same time. You could put orders in with a clerk and trade another market, but if you were trading in that pit, in the order flow, you weren't going to be doing that but in one place. So I always emphasize to people to highly focus your efforts, especially on intraday. Don't scatter and try to play multiple markets. Something will get away without a doubt. You can't keep your eye, even if I've got 6 monitors here. And even if you have all the monitors and you're looking at them, I always think about my good buddy, Steve Kalajian. I think he had 44 monitors in his trading room. So I'm just like, Steven, what are you doing? But you can't watch all this stuff. You end up focusing ultimately. So anyway, enough of this stuff. So let's go ahead and let's go back to the chart here, and let's go to NQ, go to NASDAQ. You can see similar patterns. We're seeing a little bit of momentum decay here when we get into this, not a lot. Basics trends, like I've been telling you, both in the S&P and the NASDAQ, you're probably looking at the 21-day moving average being key support in these zones right now. The blessing, in my opinion, would be to trade down to the 40 from a trend standpoint. That would give the database enough time and space to get this thing down to that 48, 52 range, or at least mid 50 percentile and the bullish percent on the daily. That for me would be really good, especially if we remain stable as we come into Friday, see the intermediates. So, but looking back to the technicals here, what you're going to see is some gradual momentum loss. It can accelerate at any moment. I think if we break the 21, I'll zoom in so you can see that. But that's right here, 22,691. If you were to break below that level, that's quite a bit. Right now we are 23,023. So that we're below that. We're seeing, like I said, I think moderate declines. Don't see anything big happening. The only news really that we have coming out, a couple little tidbits, and we still have some earnings coming out, but it doesn't look like anything can rock this market either way. That now that I've said that, something will. But the breakdown point, to me, the probabilities are slightly on the downside. There's still underlying uptrends, so that means that any sell-offs will be somewhat muted. The buy the dip trade is still out there. That hasn't went away. And it's now range bound. This, I think we're looking at here, if you go back to comments that I made all the way back in late June, you could still be writing these deep out of the money straddles on SPY or whatever your choice is, or even on the ESs. You could, that strategy has been there. Even if we go all the way back here to May, if you did the deep out of the monies, you never really got in trouble. You collected all that premium. Whether you're doing weekly or monthly strikes, your call. But that trade's still out there, and it's a perfect trade for the summertime blues. You just let it chop, and you let them pay you. I've told you stories. One of my old buddies on the trading floor in San Francisco days at the Pecos, he'd always go home short a bunch of premium every weekend, because even though the market's closed, the timeline keeps ticking. That's why you see options. If you're an option trader, you see option close at a price on Friday. The market, the underlying stock, whatever you're trading, comes in unchanged on Monday, and the options, all the call options are down, and all the put options are down. And that's just time decay still happens over the weekend when you start to do theoreticals. So not going to go too deep in there. But the bottom line is that's probably the only strategy that's going to work on these indices right now, or just day trading the ranges. And the good news is you kind of know the outer bounds, S2, S3 on market grid. I give you these things every day. It's right on the screen, the ranges, and I give you at least the primary fact sheets in the newsletter, right? So you have these numbers, and it's like easy pickings right now. So let's go ahead, and we're going to go to the treasuries. So treasuries yesterday got closed, had a high of 49, closed at 49, and the market grid was 47. So we got an RTXL signal that tells you that the treasuries should be flat to down for 1 to 2 sessions. Very short-term viewpoint, but it usually tells you that when we get above this market grid, because you can look across this range on a closing basis, it only does it. I've looked at some pretty deep data, around 12% of the time. So let's just make it even 10. 1 out of 10 days or sessions, it will close above or below. But sometimes we'll go for a month and you don't get one. I'm looking at a couple right now. So, but when you do get them, it usually gives you some leeway. So you're gonna, use market vernacular. You're gonna sell the rips after that day. If it opens higher and trades into the market grid range, you're gonna be looking at R1, R2, maybe an R3 sell, and then looking to cover into an S1. So there's some really good trading parameters, and the sheets that I showed you and talking about this. When we look at these sheets, that's what this is the matrix for between now and the close tomorrow's. So this is your matrix for how to trade that range. And so make sure you pay attention to these numbers and all of that. So let's go back. Treasuries, we're seeing what I was talking about the other day. This is daily. We're seeing momentum starting to roll. There's still some upward price momentum, which tells us we'll hold the 10-day moving average, which is right now at the, let me make sure I've got the right number, 4.39. We went out today at 4.46, down a little bit. We should continue towards that line. So there's no, because of the fact, like I said, all the disappointed people that can't troll Trump right now because the tariffs aren't creating inflation. There's a couple little areas that there's some moderate price pressure, but not generally speaking. But other than that, we should see these yields come back. It would be possible if we would have seen the same type of report we got on the CPI, then we might have got a little bit of a pop. And I did go through a complete perspective comparing the 1980s month to month over what we saw yesterday, which was a joke at best. But the dialogue's out there. Market sentiment can be short term, can be focused in on some of these numbers, and it is what it is. It set up a great trade yesterday, so we'll take it. But as far as creating bigger trends and things that are going to affect your positioning, that's not going to happen out of this type of configuration here. And you can go back and look at the extreme ranges and all this, but for the most part, it's maximum right now has been 410, 415 to 450 on the upside, and we're just stuck. If it gets above or below, it just snaps right back into range. So, and as I've said the other day, I'll just say it again, is this is this is so much bigger than the equity markets will ever be in size and the number of players. So this becomes a very stable market when we do see these sell-offs and these rips like this, big money's moving around. But then normally, I would bet if you did a midpoint, just going back to the extreme, would we get to 459? If we went from 459 and took the downward extreme during that, maybe somebody's got a calculator and can do it, 412, figure out what the midpoint is, you draw a line right through this. The midpoint is we're just oscillating on either side of that. So this is typical of bond markets. I've been a bond trader since really 1979, and I was an institutional trader for multiple years in the early 80s. So this is just how, and we're talking about when yields were 25%. We had much higher volatility, but as things normalize, these markets are so big that, and now with the national debt where we are, and I think if we start to see stable coins get some real traction, I think treasuries are going to be used for stable coins, interesting way to hold dollars and get paid. So Ray Dalio is wrong, by the way. He keeps asking, is the U.S. going bankrupt? And the answer is no. It's actually impossible to go bankrupt. You have a printing press and you have the legislature, and you can change rules at any time you want. Ray's not as smart as he looks. Let's put it that way. And that's not going to happen. It can't. If it does happen, I hope Ray has built a nice bunker. We should all have bunkers. Okay. So I can tell you I have an off-grid safe room, okay? But that was because I thought Hillary was going to win. That's one of my jokes. But anyway, the point of all this is these things are very stable. We're probably going to see more of the stability. Fed's not going to affect anything next week. There's nothing that's going to be material that comes out of that meeting at all. Trump's not going to fire Powell. And then when we get into October, I'm going to be probably screaming 25, maybe in October, November, of lower rates on the front end of the curve. And as we get closer to that, I'll discuss how that lower rates will have minimal, if any, effect on the back end of the curve. Otherwise, the 1030 is going to be not affected at all. There might be some movements. The 30 is really out of play, but the 10 is the primary. And that's thanks to Bob Rubin back in the Clinton days. All right, so let's move on. Let's hit gold. Another flat line. Same thing, straddled this thing with options. We are seeing the potential for gold. You see the red dots are starting to move up. This is daily. So we're seeing a bit I talked about this yesterday. The trend is trying to pop up. Looks like we're in a pretty stable mode. Look at the values. Let's see if I can bring this up. Oh, I forgot I can do this. I can always forget this new function. But if we look at market grid, we're looking at 3304 to 3403. The primary range is going to be 3442, 3479. If I ran the fact sheets on here right now. It's probably going to be S1, R1 as far as the ranges go. So that gives you a pretty good range to trade off of. But all of the value, listen to this. We've got 33.47, 33.05, 33.15. All of those are the 10, 21, and 40 period simple moving averages. Everything's basically a small flat line. Those are very good support, and we're looking at the PPMs are forecasting in the, let me just zoom in on so you can see this. These dotted lines are the forecast for the moving averages. So the 40 is not being forecast, but the 1021 is forecasted to start to rise again. So the only way that happens is the market has to go up, and we should start to see some ranges here. Let's see if I can bring something up here. So there's also some daily Fibonacci targets. They've been out there for a while. So let me zoom in on those. They're right here. So there's targets for 3603, 3738, and 3821. So those are your fib targets that are live above here. And you're getting confirmation because at least PPM 1 and 2 are suggesting we can get a rally out of here. So typically a fib target 1 will get hit, and that would put us up there at 3603. So there's a number. I did some intermediate analysis, I think, on Sunday night or last week. But when you look at the weekly and the monthly, the high 35, high 36 trade is out there, which is really a retest of the highs here. So if we come over here, we had 34.48, 30. So right at 34. So we break above that. We'll have to break that, and then that will be our confirmation. Yeah, it doesn't show me the fibs, but they're right here. That'll be a 3603 target if you can break it. We'll just round it off, and we'll call it 3450. So break at 3450. Probably going to see those fib targets run. The forecast is telling us that's the case. So interesting, after the little move up to the 23 level, what was the actual high was 123,236. We've been kind of traded back into the 10 period moving average. Now we still have some upward targets. It looks like we come into the weekend and next week that we're going to see maybe a retest and possibility of penetrating the 10 period moving average. Let me give you that value. That's 116, we'll call it 600. So we should test that value. There's a possibility of getting through there. It looks like maybe a 21 could be in play, which would be 112. And I talked about this last night. This would be a retest of the top side of coming back to the breakout point, which was 112. We printed, I think, just a bit above there, maybe a 113 handle. Let me take a look right here. So 111.8 was the high here. 112 even exactly was the high. And of course, if you're on a different exchange, you'll have slightly different numbers. But that all we're doing is kind of coming back to it. We still have angle of attack positive, still uptrend in place. We hit the 121 plus target that I was talking about going back a while ago. Actually, I think it was maybe 2 months ago. We hit that, we satisfied that, back to 112. We still have, if I brought up let me just look at something here. Yeah, if I bring up the weekly chart, which is a couple clicks away. The weekly chart, fib target 1 right now is there they are. Sorry about that. So here they are, 134, 213. That would be your next target on the upside. Maybe a bounce and trade off at 12, the 112. And then you got two much higher numbers, 157 and 171, 200, we'll call it. So those are in play on the intermediate. And it looks like to me, though, and this is one of the things I've told you, is that we want to get confirmation here of the PPM. So on a weekly basis, we're still got a bit of, because the market's been so strong, we still have a bit of a retracement here. But the bottom line, boy, my voice is just breaking up. Bottom line is we're not getting like the big breakout to go to the 157 or the big numbers. I think the 134 number, I think it is. Yeah, 134, 200. That's still in play in the current environment. We could fade off of there. We got support at the 10, the 21, lots of support on intermediate level. So we're locked in the uptrend. We spent maybe 4 to 5 months to finally break over the 112. And it's just going to take some time. All right, let's see, how am I doing on time? 41. Okay, so usual, was able to ramble on. Where is everybody? So we got, let's see what kind of, I did trade during the Black Monday crash. In fact, that's a great question. In fact, I wrote a newsletter. I've been writing newsletters a long time. Came out on September 16th, 1987. The title, the headline was, Risk Reward in Owning U.S. Stocks is Zero, Get Out. Now, I wasn't predicting a crash, but we put on, it was big option trader back in those days. We put on Wednesday, we started to put on these monster straddles, and we put on all kinds of short calls. We had put spreads in, time spreads layered out. I mean, it was a monster trade. And I used to have a black turbo Porsche, the 930 version, if you know what that is. And it was called my Crashmobile, because after that, I made so much money, I went out and bought me some toys. And I used to have a car phone in that Porsche. And my trading assistants, I'd leave the office, they'd say, call Batman on the bat phone. They used to call it the bat phone. So we had a lot of fun back in those days. But yeah, I was trading then. I started trading in 79. So there were a number of craziness, and I was a bond trader when rates were at 25% effectively on the short end. I think the long yields got up to 17 and a quarter, 17 and a half, roughly, if you can imagine a 30-year bond. I will tell you all a quick story that kind of triggered me in the story. So there was a guy that was a client of mine from a very wealthy family. If I told you the name of the family, you would know it. And he had pretty large pre-inheritance. And I believe it was 1981, there was an offering of a 15 3/4 bond, 30-year bond, backed by the United States Treasury. And rates had went above 16, so the bond was trading at $94. So you basically were getting an effective yield around 16 and a half, guaranteed by the U.S. government for 30 years. And the bond futures we used to trade were 8% futures, and at the time, the 8%ers are trading at $54. And so I think it was 54.12 was the low. For some reason, I remember that. But so I remember I told this guy, what you need to do is to take these several $1 million, almost 10 of them, and you need to buy these bonds. And I asked him a couple of questions. This is 1981. I said, do you believe in the creditworthiness of the U.S. government? Answer, yes. Great. So if you do, here's the deal. I even had the calculations how much for the next 5 years the bonds would, where interest rates had to go for him to lose money to put those trades on. And it would literally have to go to 22% on the 30-year. And what I told him, I said, the U.S. government, the whole economy will collapse if that were to happen. They won't stay there long. And meanwhile, you're getting paid 16.5%. There was a call, I'm sorry, the story's getting longer. The call on the bonds were 20 years. He was guaranteed for 20 years. They couldn't take the bonds away from him. And I said, you're going to get 16.5%. A lot of money on almost 10 million. And that's going to be the best thing you've ever done. And if you want to buy a house, you don't even have to get a mortgage. You can borrow 90% against those treasuries and borrow as much as, I forget the number, it was like $8.2 million you could borrow and do anything you want. And you would still be just about break even on the interest rate. So anyway, to make the story, the long story to end, is the result was he did not do the trade. He stayed in short-term money market funds and T-bills, and he watched it go. You know the rest of, well, that was the peak of the market. For the next 30 years, the markets went down, and he did not do the trade. And that was just a trade of a lifetime, right? And so, but yeah, I did trade during there. It's one of my favorite stories to tell because it was just so obvious that Ray Dalio was around then. I actually had a friend that worked for Dalio for a while. So one of the reasons why I respected him for many years, because he never talked to anybody. Ray was a much better trader or investor when he didn't talk. But the bottom line is, those days brought some amazing opportunities, and we've had some good ones over the years. This segment of time I've been through in my career has been pretty amazing. But I've got literally stories on every major event. Maybe I should do a storytelling time. I've got a couple buddies of mine that could join in. We'd probably have a lot of fun talking about it. In 1987, I had a group of my buddies. They went to the Federal Reserve to do direct deposit and transfer money to buy T-bills, and I think they got 0.5% on their money. But I got the stories. Anybody's been around me, I've got stories that go on and on, just because I've been there. But also I was there as a participant at institutional level with lots of money around to trade. So anyway, fun story. Thanks for asking that. Yeah, Andrew, I don't know. That's an interesting question. Yeah, Ukraino TV, you're right. A 16% absolutely is a scam, but that's why I framed it. That's why I framed it like I did. I asked him, "Do you trust in the creditworthiness of the United States government?" Okay, and I would just tell you these guys were one of the original investors in when the Colts went to Indianapolis. Okay, this family was very involved in that. Excuse me, but the results was no trade. I didn't even care about the commission. It didn't matter, but it was the right thing to do, And sometimes when things are that obvious, you look back, and you can really do some things. We did some crazy good stuff in the GFC, not only getting out of the way, but getting people back into markets. I had one particular very large money manager used to go on CNBC and call me a genius. I wasn't a genius. It was just obvious trade. Sometimes things are really obvious. And I would tell you right now, nothing is obvious. Those events happen. I think 2020, a lot of you folks met me then. There were some pretty obvious trades. And I remember people telling me how the market was going to, and like mid 2020, market was going to turn around and go south. I'm like, no, it's actually going to go up a lot. And of course, we all know the rest of that. Anyway, folks, I appreciate it. A few more people showed up at the end. So go back and watch a replay. It's kind of a boring day. There will not be a stream tomorrow if you came in late. But there will be Substacks on both nights. So KendallReport.substack, free 1 week trial, $8 a month. I don't think I think I took down the way that Substack works. They won't let you take down the option, but I think it's like $250 a year. Nobody with their right mind is going to buy that. Don't buy that. Okay, it's just there to deter you from that's the only way you can not do one, is you just make it ridiculously high. So don't do that trade. I'll refund your money if you do, but $8 and go from there. Yeah, that's primary for me right now, folks, because I have the ability to maintain that because of the time of day that I deliver it. So appreciate that. I'm gonna manage to get close to an hour. Natalia, what's the longest period you ever taken a break from trading? Like 0. I don't even know how to answer that. Never took a break, didn't need a break. I literally, when I look at my TradeStation screen setup, some of you have seen that. When I do that, excuse me 1 second. When I do that, I would say maybe a couple little mini vacations, 5-7 days, but they were just in the flow of things. Man, my voice has been really jacked up today, but I've been talking for about 6 hours. We have out-of-town guests, so it's just one of those things. Yeah, a time machine. I'm telling you, a time machine. I've got one buddy. I'm trying to get him. What is it? Market Zero Boomer. I like it. Yeah. Listen, folks. When you get old, you got a lot of stories, especially when you've been in multiple wars. And like I said, I can think of 3 or 4 buddies that we actually talked about all of us meeting in Vegas, getting some nice cameras and just doing like a whole podcast with all of us one-on-one, different guys just telling stories. And just, I think we could make one of my very first managers when I came off the floor is still alive, and he's in his early 80s, sharp as hell. I would love to get Ralph, and there's a couple other guys, and just there's a whole group of people. We were talking about it a couple years ago, and maybe that'll happen. That would be super fun. Bunch of old dudes talking about the old days, things that can't even happen today, some of these things. Yeah, I've got... Yeah, I just thinking about stories, folks. But that would be fun. I bet you folks would enjoy that. And it'd be really fun just to like turn the cameras and do it podcast style, just live. Don't frame it. Don't get production people. Just do it, right? and just let it fly and let the words that need to be said come out, no matter what they are. And that would be super fun. So that's kind of motivating. Maybe I'll reach out. Maybe that could happen next year. That would be a next year thing for me. Anyway, let me see if anything else to trigger. Yeah, I appreciate the Substack thing. Yeah, Mr. T, I appreciate that. Yeah, I mean, man, you guys would love it. And I would love to have it archived. You know, there's been a number markets made. My very first customer for my portfolio management tool was Tom Sawzoff, who started Thinkorswim. And he was also part of a group, another buddy of mine, Charles Cottle. He watches. Hey, Charles. But we just need to get everybody together. It would be really fun. I ran into Tom in Vegas several years ago. But yeah, so yeah, it'd be really fun. And Tom's a monster, man. He does Thinkorswim, sells it, then he does Tasty Trade, and he does it again, only bigger numbers yet. Amazing, hats off. Amazing guy, funny, great marketer, all that stuff. Pretty good trader back in the day. We were all in Chicago Board of Trades, CBOE, those kind of places. So, yeah, a lot of fun people, and there's quite a few guys still alive. Okay, I'm going to tell you guys one more story. You got me in story mode. Okay, we're at 56. The final story is the black Ferrari story. So a buddy of mine that was a bean trader in on the CBOT. So one of the guys standing in a pit, he's just like, man, I bought this black Ferrari. He goes, ever since I bought that damn car, I'm just losing my ass. I can't trade right. And Steve was this guy's name, and he should have been a stand-up comedian. This guy is one of the funniest people I've ever met in my life. And he's like, dude, it's not the car. Are you serious? He goes, I'll buy the car. These very well-heeled traders, right? He goes, I'll buy the damn thing from you. And the guy goes, I don't want it anymore. You can have it. So he buys the car. He drives it into Board of Trade, puts it in the parking lot, and Steve starts losing his ass. He can't make a good trade to do anything. And finally, he's telling the story that he got told, and they're all talking. Some guy, you guys are full of it. I'll buy the damn car. Another guy buys the car. He goes on this cold streak that's insane, right? Finally, the group of them said, nobody that trades on the CBOT, nobody we know can buy this car. So they sold it to somebody, I don't know who got the car, but it's just the funniest story because that's really true. None of these guys went on cold streaks that were just, I mean, they were getting hammered hard. And it was like ridiculous. It was almost like the car was like, I'm going to prove this guy wrong. So they're doing stupid trades, taking too much risk, trying to become a winner, and just demolish himself. Every one of them. It was a funny story. So anyway, little side story from the days of old. This was probably circa 1983, 84, something like that. So anyway, thanks for being interested. I'm sorry, my voice, like I said, we've got family in town. I've been talking since early this morning. So anyway, appreciate it. I hope you enjoy the stories. Give me a like at least for story time, and go from there. Okay, yes, yeah. Oh yeah, Steve's a great guy. So somebody said they met Steve Collagen. Yes, he knows me. Yeah, so it's kind of funny, but yeah, Steve was more of a stock guy most of the time. He spent some time in the New York pits and around. It was pretty much Chicago, San Francisco, and a lot of people after the '87 crash. A lot of people moved to the Pecos. A lot of the CBOE guys moved to the West Coast. And by the way, I got to tell you one more. It's going to be quick. The same guy that bought the Ferrari moved to San Francisco, and almost got killed 3 times because almost killed 3 people 3 times because he didn't know that you had to stop him when people are walking across the street. And he goes, Jesus, this guy walked right out in front of me. I almost killed him. And I go, dude, they have the right of way. That's pretty funny. But he bought, he's the same guy, the same Ferrari guy. He bought the drummer from Kiss's house in Pacific Heights. So these guys were real. This guy was, like I said, the funniest guy. We used to go to lunch down in the marina, and I don't think I've never been to a stand-up show that I laughed as hard being with Stevie. I won't give his name out, but it was a great story. Anyway, so hopefully you guys get some appreciation. Have a good night. Sorry I won't be here. Sunday night will be the next show that I'll do, but I appreciate it. And I do need to kind of rattle these guys. I know a couple guys would be all over it, so we need to do that. We could just, I mean, I think it would be fun if we can get the right setup, do it like maybe almost like the All-In guys do, get a nice room where you can just talk, and probably would be appropriate to have alcohol available. So anyway, folks, have a great evening. Appreciate it, everybody. So hit the like button before you leave. See you later.